Hello, good morning. Today we are going to learn about MACD indicator, which is moving average, convergence, and divergence. So let's understand. So what is MACD? MACD is a moving average, convergence, and divergence. As the name says, it is moving average. So it is based on average lines which are converging and diverging from each other. Yeah, so this is a very popular trend following indicator, or it is used in technical analysis for confirmation. It's a lagging indicator, so you cannot use as a predicting tool. So it was developed by Gerald Apple in the late 70s, and MACD is one of the type of oscillator indicator which is used by trader analysts to gauge the momentum of the stock. So there are many parameters or many components of MACD indicator. So let's understand one by one. First is MACD line. So MACD line, before that, let's understand the moving averages, because as I said, MACD is moving average. So let's understand what are moving averages. So moving average, there are two types of moving averages. One is simple moving average and exponential moving average. So simple moving average is a simple average of the number of period given, and in simple average, equal weightage is given to each and every entry or components. But in case of exponential moving average, maximum weightage is given to the recent data, and that's the reason exponential moving average is considered as a faster moving average compared to simple moving average. So in MACD, we'll be taking 26 period exponential moving average and 12 period exponential moving average. So what is MACD line? MACD line is nothing but the difference between 12 faster moving average, which is 12 period, and 26 moving period, which is a slow moving average. So MACD line formula is 12 exponential moving average minus 26 period exponential moving average. That will give you the MACD line. As in when the difference between these lines increases in positive direction, the MACD line will move above 0 level, and it will go in a positive zone. And as and when the difference between these two average line goes negative, the MACD line will fall and go below 0 in the bearish zone. So basically this MACD line will indicate us whether the current prices are trading above the average line or below the average line, right? And whether the difference is, what is the possibility of crossover? Yeah. So as and when the difference between these two lines is increasing, it is considered as a strongly trending stock. And when these lines are coming together and there is a crossover between these lines, the MACD line also changes direction. And that's the point where you see a reversal coming in. So let's see a chart. Based on that, we will understand. So I've taken a TCS daily chart. Let's remove this. So I've already added MACD here. Just for the understanding, I'm adding two averages, which is 12 period and the exponential moving average. Done. Another one, which is for 26 period. Again, exponential moving average. We'll change the color so that it's easy for us. Done. Right? So now just observe, as I said, that this black line. So let's understand this tool first. So MACD has fast moving average period 12 period, and slow moving average period is 26. Signal period is 9. Okay. Now here, these period you can change according to your requirement. It's not necessary that you have to go with this default setting, but preferably maximum people go with the default setting, and that's the area where maximum people will see the divergence and convergence. Okay. But if you're planning to analyze for this stock for a long-term basis, you can change the levels. Yeah, not necessary that you have to continue with the same. Okay. So MACD line is the black color line which is in the oscillator. So oscillator means any the window which is coming separately. Okay, and here the oscillator means the value will oscillate between some range. Okay, and that's the reason we call it as an oscillator. So MACD is an oscillator where the value is oscillating from positive to negative. The midpoint is at 0, but there is no fixed oscillating range for MACD. It can go to 20, it can go to 50, it can go to 100, 300, based on the average difference. Okay, so as in when the average difference is increasing, the MACD line can go higher and higher, or even it is increasing downward, the MACD can fall in negative also. Yeah, but that indicate a strongly trending bullish trend or bearish trend, right? So there is no defined level oscillating range here. So just observe how this MACD line, which is the black line, is moving, and the red line, as I said, it's a signal period line for 9 period. So first component, as we discussed, it's the average line, 12 exponential moving average and 26 exponential moving average. So we can see the red one is a 12, which is the faster moving average, and 26 period is the blue one. So you can observe that the red line is always moving higher. And the moment the prices are coming below, the red one is moving fast. So that's the reason it is considered a fast moving average, right? Okay, so here let's compare average convergence with MACD movement. So as in when the difference between these two lines are increasing, you can see the MACD line has started moving higher and higher. And the moment here, the difference has started reducing, the MACD line has turned downward. Okay, so whenever MACD is turning downward, that's an indication that this difference between these two lines is reducing, and there is a possibility of reversal, because when the fast moving average is coming near the long moving average or slow moving average, that's a possibility that the prices are falling, or it's consolidating, or it's range bound. Yeah, and we have seen a fall here. Now, as and when the difference between these two lines goes negative, see this point, exactly this point when the red line crosses blue line and goes below, the difference turn negative, and that's the reason MACD gone below 0 level, right? Similarly, again, the lines are coming together, converging, and then the red line again gone up, and that's the point where MACD has gone above 0 again. Yeah, so this is how the lines will move up and down. There is no overbought or oversold zone in MACD. As I said, there is no oscillating fixed range, so oscillating the range can be 100, 300, anything. So you cannot really define that what is the overbought zone for that stock. Okay. The second component here is the signal period line. So as per the default setting, so signal period line is 9 days exponential moving average of the MACD line. So MACD is the difference of these two average, and signal period is the average line of moving average of 9 for the 9 period of this MACD line. So as and when the MACD is going higher, the signal period line will also move higher. So here one thing we have to observe is MACD, whenever there is a crossover between MACD and signal period, there is a possibility of reversal. So if the black line, MACD line, is going below the red line, it's an indication of sell. And whenever the black line is coming above the red line, it's an indication of buy. Okay. And the third component MACD indicator is the MACD histogram, which is these colorful bars. Okay. So what are these? So MACD histogram is dependent on the different, so same logic is used here. The logic which is used for the MACD line, same logic is used here for the MACD histogram. So the MACD histogram will calculate the difference between the MACD line and the signal period line, which is black and the red line. So as and when the difference is positive, okay, the MACD line is above the red line, the difference will be positive, and the histogram bars will start forming above 0 level, which is here. Okay, and the difference is positive. If the difference is increasing, the green bars will form, and the moment the difference decreases, red bars will start forming. The moment black line goes below red line, which is a negative difference, the bars will start forming below zero. So as and when the difference is increasing below zero, red bars will form. And similarly, when the difference is reducing, green bar will start forming. So there is no defined way here key. If red bars are forming, then the green bar cannot form, or if green bars are forming, the red bars cannot form. There is no fixed trend here. As and when the difference reduces, the red bar will form. The difference increases, the green bar will form. So, but most of the time, where you should actually start trading. So these are the three components here. So how to analyze basically? So one, as I said, it's a lagging indicator. You cannot use this tool for the prediction because it's totally dependent on the moving averages, and averages is nothing but a historical price, right? Which is already over. So we cannot predict future based on the past, correct? So here we can use these lines for the confirmation only. So probably you can use another tool like RSI or ADX tool just for the confirmation, for the prediction whether the stock is trending or not. And then you can use MACD for the confirmation whether you're going in the right direction or not. As we say in technical, you have to use 2 to 3 confirmations and then decide your trade. So you can use MACD for the confirmation too, right? So you can see divergence happening on the stock. For example, in TCS, we can see the highs are same, but on MACD, there is a divergence. Okay, but this can happen because MACD is a lagging indicator. Also, it doesn't work in a range bound market. It works really well in a trending market. If the stock is moving within a range, the MACD will just fall or go in a small range, and you may not be able to actually predict with the help of this tool whether or use this divergence as a trading or confirmation. So don't just rely on the MACD because it is a lagging indicator and a trend following indicator. So as and when the lines will move, the lines will go up and down, right? So you can use divergence, you can use histogram. So when the histogram ends here, the bottom first green bar indicates there is a reduction in the difference. So probably there is a first sign of accumulation. You can see over here, the upside candles are forming, and that's the reason the green bars are forming. So you can use a histogram chart. The first green bar is an indication of accumulation. Similarly, the first red bar is an indication of distribution. So this way you can trade between this complete red to green and green to red. Yeah. So nothing much here. I hope I was able to clear this concept. Thank you so much.